Hello and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is September 19th and today we have a jam-packed episode full of Rocket Pool news and Ethereum news. And on the Rocket Pool side we have updates about the IMC treasury. We have some posts from Jasper because he's back, which is really exciting. We have the Rocket Pool Memories POAP. On the Ethereum side we have Vitalik's token 2049 keynote address, a whole bunch of TradFi stuff getting more crypto aligned and crypto rails. And we've got Christine Kim's thoughts on the Pectra hard fork as well, along with a lot more. So let's get started and you can check all this stuff out.
10, 9, ignition sequence start, 6.
So we're going to start here in the Rocket Pool Discord, and here Mav has a protocol update saying, in case you missed it, there's a couple of important discussions happening on the DAO governance forum. He says RPIP 62 is a tokenomics rework prelude, aka Saturn 0 or ETH only mini pools. Towards the bottom, there is a sentiment poll that has been live for a week, will lead to a snapshot vote if there is promising community sentiment. And then there's a link to the forum. He says RPIP 63 grew out of the Houston upgrade bug fix as the work expanded to include items that merited a PDAO vote. Discussion is welcome. And then there's a link. He says you can find a convenient link to all the RPIPs, including drafts for 62 and 63 right here. And then there's a link as well where you can follow the RPIPs pages for those links. So let's actually just have a quick look at the forums and see what latest information has been posted there. So for the Houston hotfix, I covered this when it went live, but since then we've not really talked about it. Here there's some information from Val about voting going. Kane's point about the voting, it says given that we have about 50,000 out of 94,000 vote initialized, I think we should do something near the end goal of 15% when everything is initialized. So that would be around 28%. Maybe go with 25 or 30 because around numbers. Like I said, that's a great point. I've raised the pull request on the RPIP to update the quorum to 30%. Epenef said then this is a bit in the weeds, but I'm going to make a few points anyway. He said we should consider if quorum is the gatekeeper we want in the quorum system when the quorum is uncertain. Supporters of the less popular side are incentivized to boycott and hope quorum isn't reached. This gives rise to weird gaming behavior and obscures actual disagreement as the vote appears extremely lopsided. And he says that as an example, which vote represents the will of the DAO better, 14% in favor and 0% opposed, or 8% in favor and 7% opposed. Then he goes on to say, I agree 50% active vote quorum is too high. However, I think the onus is on the DAO to figure things out. And then here, Val says that Lido, their quorum is 5%, and they have no sublinear scaling at all, and the single largest wallet is at 5%. And then Noshua has some ideas as well. He says, as with the original Houston RPIPs, the DAO only gets looped in after the team has decided on what to do, done it, and booked an audit. This undermines the RPIP process. I called this out back then, and Lang has promised to do better in the future, but here we are again at the exact same thing. He said, I believe there should be some separate RPIPs for separate issues. It makes it a lot easier to write and work on and easier to read. And then he says, I think RPIP 63 is partly unnecessary. The scrub attack doesn't appear viable since it requires a huge amount of attacker capital. And then more information as well. And then Langer says the Houston hotfix was intended to be a bug fix, but later developed into development. We incorporated community feedback. As a consequence, there were elements that felt needed a PDAO ratification, and so we reached out to the community for their opinion on how to proceed in terms of governance. We have been consultative and collaborative throughout the process. He says we agree the best process is the DAO ratifies before the work starts, but in this case, the process was unclear. And then there's more stuff there as well, and back and forth between them. So, yeah, Langers did a lot of posts. So this has now been live, like I said, for 7 days. So I think we could probably get a sentiment poll on here, probably on, well, there's going to be Friday in Australia time very soon. So I don't know if they'll do it on Friday, but maybe on Sunday night US, like a Monday in Australia, we should get a sentiment poll on this about going to vote. And of course, RPIP 62 is dependent on things happening in RPIP 63 to make it work. So I expect that sentiment will be quite strong, that this goes to vote as well. And then the passing of it as well. Let's have a look at 62. So, we've talked about this a whole lot on Rocket Fuel, and you can read the thread to get the full information about what it is and what it's doing. But here we have information, that's a couple of weeks old now. But let's have a look at the sentiment poll and see where it stands right now. So the sentiment poll is 48 voters, with 58% of them saying that the proposal is great and they wanted to move to vote, and 42% saying that's good enough and for it to move to vote. So that is actually really cool. And then there were some more comments here. It looks like since my last visit. So Tech says, one thing I want to add in favor of removing the cliff is that if I have 5% RPL collateral, buying RPL to increase to 6%, for example, have no incentive, and doubling your RPL position to go to 10% sounds like a big investment. So I think that removing the cliff might not be as bad for RPL as people suggest. I think the argument he's making is that people will buy small amounts or whatever they want, basically to top up some amount instead of just trying to reach 10%. And then Jota says, as far as I remember, the cliff exists to assure that in case anything bad happens, RPL can be used to cover losses. Is this not an issue anymore? And that, of course, means that, that slashing the first instance will be going to ETH, and the RPL isn't really effective collateral, which is one of the whole reasons this, so many debates in the community have even happened. Okay, moving on from that, next we have this news from Samus saying that Samus is taking over from Val as the IMC treasurer. So these monthly reports will be coming from Samus instead of from Val from now on. And Samus and Val have been working on getting these reports ready. So here we have report 27, and there's an image that you can click on to have a look at the spreadsheet that IMC runs and where all the different RPL has been going and what's been going on with it. So here Samus says the important parts: the IMC continued spending budget cut by calculating values with artificial 0.005 RPL to ETH ratio. And then he says cake pie Arbitrum co-incentives wound down. So IMC only spent there on the first fortnight, so 11,000 of RPL inflows and about 12,000 of RPL outflows. And he says I added a couple of rows to help with budgeting. And there's the RPL balance change. So the period 27 saw it go down 21.35% and change from 4.3 thousand RPL to 3.4 thousand RPL. And it says extrapolated months to zero RPL balance, and that's period 27 shows 3.68 months left. i.e. if inflows and outflows continue at this rate, we'd only be able to meet our budget goals for 3 more months before running out of RPL balance reserves to pull from. And then there's budget 28 here that you can have a look at as well. And there's some important points here as well about cutting and different things that have been happening about flows. And he says highlighted in orange are further cuts to spending so that our inflows are greater than outflows. And he says these cuts are here. So optimism activity on the chain has been lagging a bit compared to other L2s, especially base. And the hidden hand aura market cut from 1.2 ETH per fortnight to 1 ETH per fortnight. On mainnet, it says these are biggest spenders, so it makes sense to cut here. Our LPs have been relatively insensitive to our spending cuts thus far, more on that in the bottom. And then Cake Pie spending cut from 5.8 ETH per fortnight to 5.5 ETH per fortnight. And Paladin cut from 17.9 ETH per fortnight to 17.3 ETH per fortnight. And then Sam says I also updated, recalculated our non-RPL and protocol-owned asset value, protocol-owned liquidity asset value. He says these are manually calculated previously, and since they're mostly ETH denominated and RPL ETH has been down only, we actually have 2 times more TVL than previously depicted. No changes were made to the actual positions, just updated the values tracked in our budgets. And then there's the data for the 1% price impact. It says this was a significant drop in September from a whale leaving the pancake swap, but that caused the yields to shoot up and liquidity has been recovering since. See below. Besides that, things look relatively stable. So as you can see, there was a huge drop in liquidity that happened a couple of weeks ago, and then that has been trending back up because the pancake swap yields were actually amazing for that time. And there's a lot of resources here that you can check, such as looking at the sheets themselves, RPL price tracker, and 1% price impact tracker as well. So really great stuff from Samus here to provide such a nice report. And Valdo says thanks for taking over, because of course this was one of the things that Val was doing. But now, he can have his time open up for him to do other things if he wants. So that's really cool. Okay, let's go back to the Discord. And here in the Discord, we actually had a very interesting discussion that came up. And this was in response to Nixo posting about the different events that are coming up for EthStaker, which we're going to be talking about a little bit later. But there was a discussion about Lido and where that stands. And Jasper actually made some really good points. And basically the idea is that, Jasper, let's actually just go back. So there was like some questions and some ideas about CSM. Like Jasper's saying, what do you say to those who argue that CSM does not reduce the risk Lido poses to the Ethereum network? And why should we expect Lido to increase limits on home staking, backing STETH, when the risk calculation requires that home stakers to make up a small portion of the overall pie, such that the whole system would become dangerous if the home stakers were to be a large portion? And then Butter was like, what's the argument? And then the answer that Jasper gave was like 90% of stake is still maintained by a small group of entities, all ETH still under the control of one governance token. LDO is the weakest link, followed by the node operator registry. The latter is only very mildly changing in relevance with CSM. It says the risk, on the other hand, is that Lido whitewashes their brand of being semi-centralized to push past 33% of ETH staked. And so we need to create stage 012 LSTs as common parlance with rollups, kind of like L2B do with layer 2s. And this actually started a really interesting discussion about Lido, about like what it means. But one of the things that was really great is that Jasper is back in the community, because he was one of the more active members of the Rocket Pool community, but he started med school and he's been busy with, well, he's not started, he's continuing med school, and he's been busy with classes for the last while, actually, so much so that I really missed having Jasper around. But Jasper was here, and there was a really interesting discussion here about Lido from the perspective of Rocket Pool and Ethereum itself, more that from Ethereum. So that's definitely an interesting one. If you want to follow that, definitely go check out the comments. And then, of course, Jasper, not only did he come back to Discord, but he's also back to Twitter. And here he's got a whole lot of posts about Rocket Pool. So he says, never forget, our ETH is better than STETH, and screenshot of their vote to their Lido voting against self-limiting. And then he had a whole bunch of other posts as well. He says, the rhetoric that Lido's been pushing is dangerous. CSM is not a replacement for home staking. Home staking is not solo staking. Yeah. And then Jasper had loads of other tweets as well saying, don't let Lido kill solo staking. The most decentralized LST in the market is ETH, always has been, and it's only going to get better. And then other things as well. So Jasper is back on bull posting about Rocket Pool, which is absolutely awesome to see. And I really missed Jasper in the Discord and on Twitter. So it's pretty cool that he's back and putting out all these posts. I really love to see them. So thanks, Jasper. Welcome back. And I hope you stay a while this time. Okay, let's go back to the Discord here. And we have Dr. Doofus's POAP for Rocket Pool down memory lane. And he says the POAP will start going out. It'll take a few hours. That's fine. Anyway, the POAP description, he says, as Rocket Pool launches to a new beginning with with Rocket Pool version 2, aka Saturn, the community takes a trip down memory lane. In the POAP, Stakeman wearing new merch from the soon-to-be Rocket Pool store represents the future memories we will make as he supports our trip down memory lane for the Rocket Pool community. Here we are at the start in the center. It says, celebrating this amazing crypto journey and ready to face down any challenges together. Familiar faces and the colorful situations we found ourselves in and adorn this landscape of our journey. Together as POAP community members reminisce in the Discord over past events. So if you actually have a look at the POAP itself, there's some really, really cool moments here. But there's a lot of community members' faces who are in this picture. And, we have me and Yorick and Tam and Kev, Butter, Mav, Fizz, Langers, Grant, Kane. I forgot who that robot is. Is that Dave? And Joe and Nick and Spiegel and Jasper and Patricio, Patches, and Ken. Those are the faces that are in the picture. and like some of the text in the background, has memorable moments like when mainnet, Invisband, NETH versus PETH debate, astronaut cat, Z versus S, Cron is always around, RPL benefactor, 3 big buys, T-Pan's banned on his first day. I don't even know what that says. S&G glass. Oh, trading breaks S&G's glass. That's right. I remember that. McLevin is Cron. Buddha's brother. The penis POAP. Rocket Pool breaks. POAP. Superphase wins his own raffle. And a whole lot of other things. So definitely, well, if you didn't get the POAP, tough luck. The POAP is done now. I gave you guys enough warnings and heads up about getting the POAP. But this was actually a really, really nice POAP, and a whole bunch of people in the community were able to claim it. Actually, Hululo ended up making a really nice little tool that let you scrape the thread. And he was able to pick out people who had replied to this thread. So this actually will make future POAP delivery really easy, and it's actually really awesome to see. So the names here, there's a whole lot of them, and Dr. Doofus was able to just distribute the token to these, the POAP to these people, which was awesome to see. So I love POAPs, and this was a really good one. So thanks, Dr. Doofus. Okay, next we have this story from Hodger. Well, not story from Hodger. Story about a link that Hodger shared from Rated.network, and it was showing a node from Rocket Pool that was down on the beacon chain, and basically it was doing quite badly. It had 865 validators, and if you have a look at it, it shows that it's been down for nearly a month, and in this time it has lost 40 ETH of rewards. No, penalties. It's accrued as 40 ETH of penalties. So people were just like, what's going on? And he said, who's this? And it turns out that this was actually Thomas G. And yeah, it was bad. So Thomas's node has been down for a month with his 865 validators in there. And I just said, give me 40 ETH and I'll keep Thomas's node running good. And Thomas was like, WTF? I thought I was getting email alerts, but obviously he wasn't getting email alerts. And I just said, email alert failure cost him 40 ETH. And Patches said, can this somehow be Butter's fault? But yeah, this was, Thomas being one of the biggest node operators on Rocket Pool. When he is down, it's actually impacting all of Rocket Pool. Our APR suffers literally because of Thomas's node being down. So it's still not back up yet, but hopefully his node will get back up soon. But yeah, he's been down for a month. So yeah, he's basically bottom. Yeah, the last 99.9 percentile worst of the protocol. But yeah, so he's been down for a while. This was the longest he's been down. Normally, he's down for a little while and people kind of catch it and let him know, and he can get back up. But that didn't happen this time. So yeah, it's really bad. But hopefully he'll get it back up soon. At least now he knows what's going on. Okay, we've got some client updates here, and this one is from Go Ethereum, which is Geth. So that is a new update version 1.14.9, and this is a maintenance release. They also introduced support for the new multi-call spec, which is much anticipated feature, providing a ETH simulate version 1 call that takes a list of blocks and executes them as if calling multiple ETH calls sequentially, accepts optional state and precompile overrides, as well as transfer log events. And this release also ships with improved Verkle support. So if you are a Geth user and you want to update your latest version, you can go through the software update stuff in your terminal user interface, and you can update your Geth. Okay, let's go back to Discord, and here we have Marceau. So Marceau was around, and he was posting about NodeSet. So Jenum asked the question how many RPL is Marcy going to put in NodeSet, and he just replied by saying yes. So Marceau has a few 100,000 RPL that are currently in Aave, And it's so funny that we just know everyone's business in crypto. It never ceases to astonish me. But yeah, he has a few 100,000 RPL in Aave, which I guess some of that will be going into NodeSet. So he just replied by saying yes. And then Bossy said, Marceau is back, we're so back. Marceau is here, we're so back. And then he said, Marceau clarified and he said, NodeSet will not be constrained on RPL. I guarantee it. There are a lot of very big RPL holders who are aligned with NodeSet. So this is one of the things that I've been thinking for a while, that look, there will be RPL, that they need, because you need about a million RPL to have 2,000, I think, validators or something like that. So that's a whole lot of ETH, right? But it's also a lot of RPL that they need to get, considering the whole of Aave has about 500,000. I think the rewards for RPL will be a little bit better with NodeSet than they are with Aave. So there might be, there might be movement from Aave to NodeSet, but that's going to be, we'll have to wait and see that. Bossy said, what's the most realistic bullish scenario for NodeSet? And I said that they'll be able to mint 100,000 XR ETH. That is quite a nice amount of XR ETH, considering that Rocket Pool in 2 years has around 500,000 R ETH. That's what I kind of presented as my answer. But Marceau replied by saying, in my opinion, it would be that NodeSet completely solves the RETH supply issue. Deposit pool is perma empty and growth is constrained only by demand for RETH. So that is a world, I said that, I think that's going to happen in Saturn 2 world regardless, but Saturn 2 work maybe as much as 18 months away. Of course, we've got a lot of things that are coming before Saturn 2 in order to bring demand to Rocket Pool and make us RETH supply constrained. But I don't know. I don't know how much confidence I can say with that. That will be the case, that they'll always be empty from that. So with ETH only validators and RPIP 62 and NodeSet coming online, I can envisage the deposit pool emptying out, like at least once, maybe many times, over the coming months. But I can see a world in which it's full again, leading into Saturn 1. Saturn 1 will then allow LEB4s instead of LEB8s, which is going to massively push the amount of our ETH we can mint. Is going to basically take us from 500,000 now, what we have now, right, up to 1.5 million, I think 3 times more again, which is a huge amount of our ETH. So I'm fairly sure that, we won't be RETH supply constrained anymore after that. However, if somehow, amazingly, we are still RETH supply constrained, then with Saturn 2, we'll basically go from 1.5 million to 5 million RETH based on just the nodes that we have now and the amount of node operator ETH we have right now. So I'm definitely envisioning a world where Rocket Pool is perma RETH supply constrained. It'll just be a matter of seeing how that's going to work in reality and when that's going to happen. But I think happening with NodeSet and RPIP 62 is possible. I think happening with Saturn 1 is likely. I think happening with Saturn 2 is a certainty. So that's how I'm kind of thinking of it in my mind. But I guess we'll wait and see. Okay, next we have some staking news. And one of the big pieces of staking news that came out today was EthStaker doing a community call with Demi from Lido, talking about Lido CSM. I've only been able to watch around half of this so far, around 30 minutes out of 1 hour and 8 minutes. But I basically, it's nothing too much has been asked so far. Apparently some of the questions were, good questions. And, they had answers to that, but I haven't, like I said, haven't been able to watch it yet. But if you have been able to watch it, I hope you enjoy it. I did enjoy talking to Demi, but I think some of the criticism of Lido, maybe I could have been a bit stronger about that, but that's fine now. That's besides the point. But Lido CSM is getting closer every day, and they're on their marketing campaign for that now. Okay, moving on to Ethereum news here. We have, actually I'm missing some, Yeah, no, that's right. Okay, so some Ethereum news here. We have news from Vitalik's keynote speech at Token 49. So Vitalik here he said we're not early to crypto anymore, but we're early to crypto being usable. So if you have a look at this article on Unchained, they say today Ethereum's ecosystem has vastly lower transaction fees and greatly improved user experience, providing builders with both decentralization and practicality, the network's co-founder said. So, of course, Vitalik leaning into the fact that the Ethereum scaling roadmap is going well from the perspective of a user. So, if you are using Ethereum, you can get really cheap transactions happening very easily. You can get into the next block very easily, and that, of course, makes for a really good user experience. But if you're interested in the whole of the comments, you can read this article and or watch the video of the recording. But Vitalik's like highlighting that just in the last bull market, people were paying $50 to transact using ETH. I remember doing a Uniswap swap and I paid over $200, I think $250 in gas fees. So I believe it. And then here, Vitalik, basically saying that the current fees are basically zero compared to that, 1,000 times less. Like I said, I did a cow swap recently that was gasless, but I guess the real answer is that there was like a few cents worth of fees in that, like if that, so or maybe like less than $1. So it's come really far on mainnet. But then Vitalik has a lot more points he was making in this talk as well. So give that a listen or a watch if you are interested in that. Okay, so I've been talking about TradFi coming onto crypto rails and Ethereum rails, and here we got news of WisdomTree, who are an asset manager with $110 billion on assets under management, and they are now announcing that they're doing WisdomTree Connect, a new platform unlocking tokenized real-world assets access for firms seeking integration between traditional and decentralized finance. And basically they're building a product, and you'll see right away that they are building this on Ethereum, and that's actually really awesome. So here's some screenshots from the text. It says, maintains the official record of the share ownership via a blockchain integration system with respect to each token on the Ethereum blockchain. So this is being built on Ethereum, which is absolutely awesome to see. And a whole lot of people in the Ethereum ecosystem were like, yeah, they said Ethereum. So that's really cool. And again, another company now is coming onto crypto rails, and this is Revolut, which is like an online banking powerhouse. It's like in many countries around the world, and they are actually now in the process of launching their own crypto stablecoin, and it's going to start on Ethereum. It probably will move to other blockchains later, but it just makes sense for them to start on Ethereum. That's where all the liquidity is, that's where all the demand is, and for stablecoins, almost all of it is there. And Revolut are coming on there as well. Revolut, I think, in some ways, the most similar company I can think of to Revolut is like PayPal, and PayPal's PYUSD is obviously a $2 billion market cap now, and Revolut are like, hey, we want to see some of the piece of that pie. What they should be doing, if they asked me to consult for them, I would have suggested that they start layer 2. They can use the optimism superchain, so they can get that cross-chain interoperability when they get started there. But it's incredibly easy for them to start. Like Base has done it, Zora's done it, a whole bunch of others are in the process of doing it. They could have done that. They could have set up their own L2 with like dirt cheap fees for their users, and then they could even subsidize those fees, like those sub-cent fees, and they could get so much off the top of it if they kind of built out a DeFi ecosystem there. But hey, no one's asking me, so yeah. But that's really cool that that's happening. Okay, next we got some news about L2s, and here Leon says that L2 adoption on Ethereum is unstoppable. We've hit an all-time high with 14.65 million ETH locked on L2s. And this is the value in Ether, not just in USD, keeps climbing daily. Its monetary value is soaring across rapidly expanding ecosystem. So this is part of the thesis that people have been espousing recently, that look, ETH is money. And when you go onto the L2s, all the trading pairs, every unit of account is with ETH. And because of that, the ETH is being adopted as money in more and more places, which of course gives it that monetary premium. and makes it more worthwhile as money. But if you look at the chart here from L2B with TVL across all L2s, you'll see that there's 14.65 million ETH tokens on there now, which like Leon said is an all-time high. And this number I only expect to grow over the course of the coming year. If we get a bull market in 2025, which a lot of people are hoping happens, I could expect this number to double in that time as more people go onto L2s and try to, transact cheaply and do more activities online, for in a much easier way than doing it on mainnet. But that is really, really great to see. Okay, next we got this post from Christine Kim talking about her views on the Pectra split. And basically, we talked about this in Rocket Fuel earlier this week and last week about how the Pectra upgrade might be split into two parts, with Pectra 1 and Pectra 2. And she says that it's the same idea to split it and that it's not going to make the upgrade ship faster. From a narrative perspective, having a UX-focused upgrade headline EUF, small stuff like 7702, and the data availability-focused upgrade headline the POAP makes more sense. He says what goes into Pectra 2 is a huge to be determined and likely won't get finalized until after Pectra 1 is live on mainnet. And then there's a link to a podcast if you want to listen to Christine's ideas. And here, Hani Abu replies by saying, are we going to shove more stuff into Pectra 2? So we end up needing a Pectra 3. But here, Lightclients actually replied by saying it'll definitely make the upgrade ship faster. With POAP and EOF, there wasn't even a clear idea when the target for the fork might be. So Christine says agree to disagree. So the idea, of course, is that, Pectra 1 would come in Q1 of 2025. And then Pectra 2 would come at the end of 2025 in Q4. But that's just, speculation. There's no dates, of course, as always with Ethereum Foundation hard forks. Okay, Bitwise is getting bullish on Ethereum. They've been bullish on Ethereum for a while. Matt Hogan's been on Bankless and really hyped up Ethereum really well. Of course, being an ETF operator, they are bound by rules and regulations in what they can and can't say. But he says Ethereum slip has attracted some haters. What they're missing is more than half of all stablecoins are on Ethereum. More than 60% of all DeFi assets are locked on Ethereum. Polymarket settles on Ethereum. ETH looks like a potential contrarian bet through the year end of 2024. So what Matt is saying is that I think he thinks that ETH will outperform other crypto assets going into the last quarter of 2024. And then he's has this screenshot from an article, I guess, and he says it's cool to hate Ethereum right now, but I bet this ends up looking really silly. And that's kind of tying into this negative sentiment basically that I mentioned on Rocket Fuel a whole bunch of times, that people in Ethereum and people outside of Ethereum, while people in Ethereum are hurting, people outside of Ethereum are mocking Ethereum and saying it's dead and all this kind of stuff. And the reality hopefully will be that Ethereum is going to bounce back really strongly into the end of this year, and then I think it's going to have a really strong 2025. So here's hoping that things go well for Ethereum. Okay, we've got some news that seems like big news on the surface, but it might not actually be that big news. So here, Kyle put out a post saying that Google Cloud just released Ethereum compatible RPC service. So RPC service is what your wallet uses to connect and get information from the blockchain. And here Google are going to start providing this service now. And there's this Google Cloud tweet that came out as well saying, building on our commitment to support Web3 developers, we're announcing the preview launch of our new blockchain RPC, remote procedure call service. And then read more, there's a link to Google, and this says that they can handle 100 requests a second, 1 million requests a day, and it will support EIP 1474. And it says the data is that the details they'll provide developers with streamlined way to interact with blockchain data, offers a scalable and reliable solution that eliminates the complexities of managing node infrastructure, and the free tier is with 100 requests a second and 1 million requests per day. So if you have an app, you can actually start using this to communicate with the blockchain, which is cool. MetaMask, their Twitter account, replied by saying, "Chat, is this what we call Web3 adoption?" So yeah, it sounds amazing that Google and Ethereum partnering and all this kind of stuff, and this is the stuff that memes were built of. In the previous cycles, where if this post had come out that Google were integrating Ethereum, it would be a 20% candle on the daily. Sadly, this kind of news doesn't move the market as much anymore. But in reality, it's not that big a deal. Like, it's nice for an infrastructure perspective, but it's only for a very small niche of users. It's not just for me and you, basically. Okay, we've got some news of Donald Trump, which I know everyone loves to hear, but the Trump family and Donald Trump are releasing a token, this World Liberty Financial Protocol, and they've got token details. So the token is WLFI tokens, and 63% of them will be going to accredited investors in the United States. So this is kind of like ICO, but instead of for the public, it's just going to accredited investors in the US. There's other percentages of the token that are going to be going to different groups. So you can follow the details in this post from Decrypt, saying the majority of the token supply will be distributed in forthcoming token sale, with portion of net proceeds from that sale going to the project's multi-signature wallet, treasury reserve, according to an excerpt of World Liberty's white paper reviewed by Decrypt, and a remainder of the net proceeds from the sale will be paid to the project's founders, teams, and service providers. So approximately 17.33% of the token supply will be earmarked for incentivizing the expansion of participation in the governance of World Liberty, with the other community growth initiatives, according to excerpt of the white paper. And the remaining 20% of the token will go to project's team, advisors, and future hires, with the undisclosed portions of WLFI earmarked for the WLF Foundation, affiliates of the Trump Organization, and the Witkoff Group, which is run by longtime Trump ally and friend Steve Witkoff, a participant in World Liberty. So one of the things that's really interesting is it looks like they're getting around some of the SEC's rules and ideas by doing a sale like this. From what I heard, this is the way a Bitcoin layer 2 called Stacks did it as well. And so far they've avoided the ire of the SEC. So we might start seeing token sales going through like this instead of going through VCs and things like that. If you have a look at the Rocket Pool Discord here, there was some, sorry, not the Rocket Pool Discord, I'm sorry, the Daily Gwei Discord. You'll see that there was a lot of talk about this on the Discord there, and how the XRP case basically showing that the secondary market sales isn't securities offerings might be how they're kind of doing this. So at the moment, the token on launch will be non-transferable. Of course, that will go to a vote, and people will make it transferable very soon, I'm sure, or not long after it's sold. So because that'll be on the DAO, right? And that's how you kind of get around those things. And then once the vote is made to make it openly circulatable, then they'll start selling it on Uniswap and other markets, and people will be able to cash out on those tokens and make bank. So in some ways, with tokens, this will be 100% kind of insider, like with 60% going to accredited investors and the rest going to the foundation and like payments and stuff. So I'm not going to buy this token, but here I'm sure a lot of people will. Okay, and then the DC investors' take on this, it says, you love it or hate it, CNBC is talking about DeFi right now thanks to the Trump crypto project. Could be a moment which rekindles Ethereum DeFi and renews interest in its value proposition for Wall Street types and normies. So they actually literally had, pictures on their screens talking about token allocations and sales and all this kind of stuff. And it's definitely really interesting to see. Okay, next I'm going to be talking about liquidity, and here they've got a new post out about the bold standard, and this is getting ready for liquidity v2 that's coming, and they said that liquidity v2 will set the gold, or as we call it, the bold standard for CDPs and stablecoins. So they are here talking about how the token is going to be set up, and how you can get CDPs and how you can mint the token. So it says it will create a unique offering in DeFi that is tailored to ETH believers. Bold decisions were made to create a protocol that puts decentralization at its core and gives users full control, and says that this is a public good where users share all the economic benefits. So 100% direct revenue is passed through to bondholders and the community, no middlemen, DAOs, or central intermediaries. They've got a whole lot more as well about how you're in full control of your stablecoins, and how you use them. There's like truly permissionless, unstoppable. And then there's talking about how it's a public good and how it's going. Like I love liquidity. I've talked about liquidity a whole lot. I get paid in liquidity, the LUSD, and I'm so happy with that. So it looks like they're doing some really, really cool, exciting, and bold things, to take their pun. And I'm excited to see how it works out. Okay, moving on to some other news now. We've got some whole bunch of other news today. So there's actually more other news today than there were rocket pool news. So the big news from yesterday was that the Federal Reserve announced interest rate cuts in the US, and this was for 50 basis points or 0.5%. And this was the first time they did an interest rate cut in 4 years. And this was actually the biggest cut they have done in, I think, over 20 years or something like that. So actually not 20 years, I think since the Great Recession, financial crisis of 2007, 2008. So they basically announced that, and there were lots of takes about this. So here people were very surprised. Jeff Dolman says that I was surprised about this, but this, they made a lot of effort to make sure that the market didn't see this as a panic and kind of understood it. And then here Ben Cowen says, highlights a quote from the press conference saying the committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. So the quantitative tightening continues even though the rates are going down. The Fed is still reducing its balance sheet, which is still pressure on the markets, which means that prices might not rally as strongly. It looks like, at least into November or maybe December, we'll start getting into a quantitative easing period, and that I think will be interesting to see how things play out then. Okay, and then here, we got news as well from the Fed talking about how, well, not from the Fed, but analysts talking about how there'll be 1.25% of cuts this year. And this is from Citi's Fed preview. So they're saying that, 50 basis points got cut yesterday. So in November, we'll get 25. And maybe in December, we'll get 50. So there's arguments to be made of what that might look like. But the Fed are forecasting 10 rate cuts in the next year. So interest rates will go down from 5.5% as they were yesterday before the first cut, down to 3% basically, which is, I think, much better for risk on markets, which parts of crypto are definitely risk on markets. So that's going to be very interesting to see how that plays out. Okay, next we have news of from Eric Balchunas here talking about BlackRock and them hyping up Bitcoin in a report. And he's saying this is a report from BlackRock saying Bitcoin, a unique diversifier, why Bitcoin's appeal to investors lies in its detachment from traditional risk and return drivers. And here Eric says BlackRock just put out a 9-page document, white paper, that makes the case for Bitcoin ETF as a unique diversifier that can hedge against fiscal, monetary, and geopolitical risks, including a section called Bitcoin's Path to $1 trillion market cap. Read the whole thing here. So like I was saying earlier, about when I was talking about Matt Hogan and Bitwise, BlackRock are not allowed to actively shill their product. However, they did do some shilly things in the product in their report, which kind of if you read between the lines is a way of saying, hey, you guys should really be invested in this. So here Eric says, BlackRock on the growing US debt with no end in sight, which it says Bitcoin can offer protection from. This is why some have called the Bitcoin the second amendment of money. And then Eric says that regarding the 1 trillion, it's already at the trillion. Yes, that's what this section explains. I doubt they're allowed to predict anything, but they do show charts with the returns in different periods hinting at future growth. So like I'm saying, they're starting to say that, hey, look, it's gone from $0 to $1 trillion. That's pretty awesome. But in the future, it's going to go a lot higher than the $1 trillion. And that's where you should be buying it. What I'm really curious to see is these kind of reports coming out about Ethereum from BlackRock and other ETF providers. And I think the way that they can sell that to their customers is going to be a lot more interesting because of the fact that Ethereum just has way better value propositions for them, including, a future staking ETF will be able to give them yield. And that, of course, is incredibly exciting. One thing that's really interesting here is there's a European court case going on with Apple and the EU, and the EU wants Apple to open up their iPhone operating system. And one of the things that might happen from that is you might get access to the payments module. So here Matthew Siegel says Apple gets EU warning to open up iPhone operating system. And then there's a quote saying, one of the aims of the Digital Markets Act is to ensure other developers can gain access to key Apple features such as Siri voice commands and its payments chip. Now, why am I covering this on Rocket Fuel? Well, the payments chip is actually going to be a way that you could then get crypto wallets to link with the payments chip, and you can go to vendors and use your crypto to pay using the tap to pay functionality that your iPhone has. That's going to be really amazing for things like MetaMask, Coinbase smart wallets, etc. So you can just pay for your crypto, pay using crypto using the Apple's tap feature, which will be absolutely amazing to see. So I thought that's something worth looking out for. And next we've got, I gave that bullish Bitcoin post, but now there's some bearish Bitcoin stuff. So Bitcoin's scaling solution, one of them for the last few years, has been the Lightning Network, and it looks like the Lightning Network is dead. So here, Monero Bull says Lightning is over, and it shows the Lightning nodes are going down a lot. Network capacity has gone down a lot. Capacity per channel has gone down a lot, and the number of channels have actually crashed as well to levels not seen since. All of those are now at levels not seen since 2019. And here they're saying there's less channels than half a decade ago, and it seems like some of the big players are pulled out of Lightning. Now there is this budding ecosystem supposedly of Bitcoin layer 2s that are coming online. They're not really layer 2s in the sense that we understand them on Ethereum, but there's a lot of money going into that now, and it seems like the Lightning network has people have agreed that this is dead. So here, Joel says the Bitcoin Lightning Network took a massive drop in network activity recently. Now it's at 2020 levels. Is this the beginning of the end? And then there's more charts as well that you can see. And Antiprosynthesis says we never even got the beginning of the beginning. Ethereum L2s is obliterating Bitcoin Lightning's network. And of course, the activity, TVL, all of that on ETH layer 2s just vastly outperform anything that's happening on Bitcoin in terms of their layer 2s over there. And then here, Antiprosynthesis explains, he says, for reference, Arbitrum alone has 8 times more Bitcoin than the Lightning Network does. And he says it's still tiny compared to ETH, but still. So that just tells you just how much Bitcoin itself is on Ethereum layer 2s, let alone Ethereum, compared to Lightning and what that was supposed to mean. And then I'm going to finish the episode here with this video of Michael Saylor talking to the guy who wrote the Bitcoin Standard book, talking to him about how, you want to get yield on your BTC and how banks will offer you a yield potentially and how that's going to work. And it was just the most clueless chat. Honestly, here FMC says, watch as Michael Saylor invents Ethereum live on air during a Bitcoin maximalism interview. So basically he's saying that people won't use Bitcoin unless you can get some kind of yield for your Bitcoin. And of course, with Ethereum, you can get yield through staking, and that just doesn't exist on Bitcoin. And that's just one of the reasons why your ETH is a much more favorable asset than Bitcoin, because you can have a forever ETH strategy and still exist within, a fiat world. Bitcoin, for there to be a Bitcoin world like this, you would need Bitcoin to collapse completely, the traditional financial markets to collapse completely, which of course, is not happening right now. And as Saylor says, won't happen. So with Ethereum, you can do a forever stake strategy. You can stake your ETH, and if you have enough of it staked, or if it's worth enough as you're getting rewards, you could pretty much just live off the rewards of staking, so your principal investment never gets touched. If you hold an LST, for example, you don't even have to stake actively. For example, Rocket Pool's RETH, current rewards are around 3%. So if you have 1,000 ETH, you swap it to RETH, on that, you are then earning 30 ETH a year of rewards. Right now, that's $65,000. That's 3% yield that you're getting. Of course, as the value of ETH goes up, then the amount in US dollar terms that you're earning goes up as well. And that's kind of the foundation of the forever stake strategy that a whole lot of people are kind of adopting. And it makes sense. It just makes sense. So I think Michael Saylor seems to be very close to realizing that Ethereum is a superior blockchain. ETH is a superior monetary asset because it lets you get that. And then here people started saying, is this the first time I've heard Saylor be wrong? How long ago was this interview? And this, of course, was from today, or I think this week. And other people saying, it's like listening to Dumb and Dumber of economics. And I wonder if and how Saylor would pivot to Ethereum. He's all in on BTC. The damage would be severe. Maybe he'll just put it into BTC. And he could probably still spin that as a form of Bitcoin maximalism. So yeah, if he puts all his BTC into Coinbase and then puts that on chain on Ethereum, he can actually start earning a yield by putting in liquidity pools or lending protocols or other things like that. But I'm going to end the episode today on that note. It's quite a funny note, but yeah, thank you all for watching, listening, and being part of the Rocket Fuel community. Thanks again for putting up with one of my mega episodes, because I missed yesterday's episode because I had Nick from NodeSet on. Oh, actually, I didn't talk about that. Yeah, so Nick from NodeSet was on Rocket Fuel yesterday on Launchpad, and he let me show you all. Yeah, so this is the episode that came out yesterday. So in episode 21 of Launchpad, I talked to Nick S, the founder of Node Operators, and Nick talks about his crypto journey, finding Rocket Pool community, co-founding NodeSet, launch of Constellation, and Gravita's role in the whole process, and much more. So Nick, of course, like I said, is the co-founder of NodeSet. NodeSet is a layer 2 built on top of Rocket Pool. They're going to have their own LST called XRETH. They will also have their own LST for Rocket Pool's RPL token, which is the first LST for RPL. That'll be called XRPL. So they'll be taking in ETH and RPL from people who are minting their LST. On the background, what they'll be doing is sending that to their group of node operators, currently standing at 260 strong, with ideas to grow significantly. Those node operators will then stake the ETH and RPL on their behalf with Rocket Pool, and they'll earn those outsized rewards for ETH staking. So currently that is around 1.3 times solo staking, I think, or somewhere around there. What will happen with those rewards then is they'll actually give 100% of solo staking rewards to LST holders, and the other 30% that's left on top will be divided out amongst node operators. I'm presuming Gravita, NodeSet, also liquidity incentives, all that kind of stuff. I don't know exact divisions of that yet. We're still waiting for some information. But we'll be getting that information in the coming days, and I'll be covering it on Rocket Fuel for you all to see. But NodeSet is a project that I'm extremely excited about. I'm really happy to see them coming online. I want them online as soon as possible, but it looks like they're still about 4 weeks away. And potentially, we don't have a date yet, but that's just my guess. But this was a really cool chat with Nick. I also have 2 more calls planned with people from NodeSet, one from Wanda, and that's going to be talking about the technical aspects of NodeSet and their system constellation hyperdrive. And then I will have one with Rhett from Gravita, because they are the ones who are doing the launch of Constellation. So that will be a very DeFi-oriented talk, where we'll be talking about XRETH, XRPL, what the rewards might look like, what the DeFi integrations will look like on day one, whether Gravita will be accepting both of them as collateral or not. And then we'll also be talking about, what their plans are for incentivizing minting of those tokens. We'll talk about incentivizing maybe to get integrations into DeFi products and other things on top. So yeah, NodeSet is very close to launch. It's a very exciting time, and you can check it all out by going on that link. So sorry about that little addition. I don't know why I forgot to put it in my notes, but now I hope you enjoyed watching Rocket Fuel today, and I will see you all tomorrow. Bye.